how can I make things easier or better for those that will inherit my savings or be a trustee over what I have saved. So we're looking at passing wealth down to the next generation or whoever your beneficiaries may be. The main thing you're trying to avoid or reduce is probate. So any assets not held in a will typically will go through a probate process. So when we have retirement accounts or anything that we own that has a beneficiary named on it, those will automatically bypass probate. We already know who the beneficiary is. Those accounts also bypass any wills. So if on your Plan 3 account, it says the beneficiary is my wife or my ex-wife, and my will says it's my kids, it's going to go off of what says on your retirement account. Doesn't matter what the will says, doesn't matter how good of a lawyer has set it up, that's the way the rules work. They go off the beneficiary, not what the will says. You always make sure that those two are lined up to your wishes. So if you're trying to make things easier for them, try to get your beneficiaries updated and keep them updated as best you can. You want to let them know what your wishes are in case something happens to you where you're not able to make changes or you're in some type of reduced mental capacity where you can't do that type of action anymore. At least somebody else knows what your wishes were and they can honor it. Again, that's where the living will is going to come into place, where you can physically write down what your wishes are. Anything that's not held inside a retirement account that doesn't have beneficiaries listed on them will typically have to go through probate. So having your home and stuff in trust will make the process go a lot smoother. There are different types of trusts. A lot of people try to get too fancy with it and they try to avoid estate taxes and things like that. And it's just too complicated when you get into that realm. From the general point, having things in trusts or in wills will typically make things transfer a little bit quicker. Another thing you do to make things better for those that will inherit is it depends on what kind of assets they get. So if they inherit stock, they get a supplement basis. That's one of the best things to pass down is like individual stock accounts. If when they inherit a Roth IRA account, that money comes to them, it's tax-free to spend however they choose to do so. The thing to watch for though is any type of qualified retirement accounts, IRAs, Plan 3, Deferred Comp 403Bs that are in your name still, where taxes have not been paid on it. When your child or whoever inherits that money from you, anyone that's not a spouse, under the current rules, they only have 10 years to fully distribute that money, which means if they inherit $1 million account from you, theoretically they have to pull $100,000 out every single year for 10 years to wind that account down. So remember that money that comes out of pre-tax counts as income. So they're going to be forced essentially to get $100,000 of income on top of their salary that they're already earning, because most people when they inherit money, they're still working. They're usually in their peak earning years in their 50s and 60s. That's going to more likely throw them up into either the higher of the tax bracket, if not jump a few brackets, and it's going to have them owe a lot more taxes. So if you're trying to make things better for the next generation, when you pass money down that's after tax, already in stock accounts or a Roth account, it just makes it so much easier. They don't have to worry about getting hit with these massive tax bills. So passing down Roth accounts are going to be so much more efficient. So I worked with a few clients where they didn't really see the point on paying so much taxes now to convert their money because they'll never need it. They have enough from Social Security and their pensions. They'll never need to spend down their retirement accounts. And they said, I'll let it grow. I'm okay with paying whatever taxes come out with the RMDs. But as soon as you start bringing the child part of it and how much it's going to hurt them, usually that starts to get them moving a little bit sooner, and they start doing even bigger conversions because they know when they leave this earth, they want to make sure that their children will have the best life possible, and they can hand them the funds that are after tax. It's going to make the transition process so much easier for them, less headache with taxes, and then more likely they're going to be able to keep more of the money that you gave them. Another thing you can do to make things easier is make sure you have an estate plan in place. Wills and trusts are a good first part of it all, but you need to have some type of strategy. If you are going to end up paying any type of estate tax bill, which again in Washington is anytime you have assets over $2 million, that's usually when you have the estate tax bill that comes into play. You want to have some type of plan to pay for that bill. If they don't, then the kids are going to have to pay out of whatever they inherited from you. And you might be okay with that, but there's more efficient ways to pass wealth on than just letting them deal with it. Now, you may think $2 million may seem like a lot, but the key point in Washington is it's not portable. So each couple or spouse may have $2 million exemption, and together it's 4. When one spouse passes away, now it's down to just 2. Their assets will go to their spouse, and there's no estate tax triggered yet. But when that spouse passes away, that's what triggers the estate tax bill. $2 million isn't what it used to be. There's some people whose homes are now worth $1 million alone, throw in their retirement accounts, cars, rental properties, and $2, $3, $4 million is not out of the question, especially when you consider that this is at the end of your life, not just now. If you're in your 50s and 60s and already have $2 million saved up, you're going to quickly go over $2.3 million in the next 20, 30 years. So estate planning is a real big part, and it will greatly help those that will inherit your money next. All right, so that was a great question. If you want more content like this, head over to WashingtonTourspers.com. I have all my free content and downloads available on there. If you need help diving into your financial plan, you want to help with the tax planning piece, you want to avoid this tax bomb, then I encourage you to sign up so we can start going through this together. The link to get on my calendar will be in the description below. I look forward to chatting with you guys soon. And with that being said, I'll catch you guys next time. Remember that your future depends what you do today.